How are you doing?
Yeah, I'm good. And you?
Yeah, pretty good.
I have advanced a lot with the modeling, so hope to show today.
Great. Yeah. Unfortunately, Gregory's in Ecuador this week, so I don't think he'll be joining the call.
Hmm. Okay.
Do you ever use Loom?
Um, Let me know. What is it?
Loom is a way of like recording demos and other stuff like that. If
Ah,
you
I see, I
don't
see.
already
Short
have it,
videos. Yeah.
yeah, I mean, it's probably a paid service or something. So if you don't have it, you don't need to get it. But I guess I was just thinking it would be nice to find some way of you creating a short demo, even if it's like, I don't know, a video you post on Twitter or who knows, but like some kind of little walkthrough for people. I'm sure Gregory would find that helpful since he's not on the call, but I bet other people would like that too.
Yeah, yeah, and also saw that, in the plans for this model, education, discussion, and improvements was like a big part of it. And just creating a model was not extremely hard. But yeah, I just shared it on weekend because I just finished it and no, I was like looking to, I didn't want to continue and do it without like the feedback. So I just shared with it, but I understand that it's not clear for somebody who just opened it. But it also like we need to discuss not just the interface, but underlying, mechanics and so on. So I think to have some educational sessions or some materials would come a bit later in the process.
Yep, that makes sense.
Okay, let's wait and see who joins. I'll also share in the chat.
Yes. Yep.
Have you opened it, the model?
Where did you last share it?
In the Telegram chat? I haven't pinned it,
Is
but
it
I
at
can.
is it recently in the
I'll send in the
uh
chat, in the Telegram chat again, just for
okay,
convenience.
yeah, great.
Hi, Christian.
Good morning.
Oh, there we go.
I'm getting the kids ready for school, so I'm gonna mostly just be listening this round.
Okay.
Yeah, I do have it pulled up now, Max.
Hmm. Yeah, I was just curious if you have like looked into it.
Just
Uh,
looking through it now.
Hey, Brandon. So I think we can slowly start. So let's collect the agenda. From my side, it's looking together the model. Then there are two questions to clarify on the maximum supply and of the token and the recent DAO vote. We could also quickly touch with Christian on liquidity DAO page and discuss the plans for Q4. What did you have in mind for today?
That sounds like a good plan.
Okay. So let's jump in the model, right? So I'll quickly show you again. I'm working a bit on the UI. There are some improvements to be done, but basically I created the first model with parameters for Regen. It also tries to be quite close to our current variables. So for example, we have like on the token page, it mentions that there are 22,700 of wallets in Regen, but due to the that every agent is autonomous and makes decision, putting 20,000 agents is too complex and it doesn't provide any additional insight. So I like it's like 227 hundreds of wallets, kind of this aggregation of wallets, but they still like a big number of independent agents. Then I took the total supply, and there would be a question about what's our total supply, but from one website, like I estimated that it would be 660,000 per wallet if we have this amount of wallets. Again, I guess many wallets would have not much, like not many tokens or something, but there is also the other number which should disclose us with the concentration. So, it's like it may be mean between everybody, but where is the standard deviation? Is it closer to most people having zero or most people having more? Like the bigger the number, the better. But I put the same, imagining to have like ideal distribution, standard distribution. So yeah, maybe it would be a bit easier to, like I had also this diagram here. So we speak here about the holders. And so far I created like a kind of a rule. Again, it's like more on the feelings right now. We can improve it where needed, but that 70% of the holders like hodl no matter what, and stake it. Then 10% are validators, and I set the rule for them that 10% validators sell all of the rewards. So they don't sell their tokens, but they sell the rewards to fund their operations. And that 20% are random. Like I was playing with different things, like maybe buy or maybe sell, but looking at our recent dynamics on the token, I imagined like 50% of sell and up to 2% of inventory, which makes like 100% of 1% being sold every tick. Every tick in this. Hey, Mark. Hey, Kawe. I'm describing the model we did for Regen with CatCat. And I'm explaining now the setup in there. So yeah, 20% have random behavior, and usually they sell 1% of the inventory as imagined right now. So then there is like minter, I called it fund, but it's like, temporary fund that means the tokens based on the issuance rate, and then it can distribute some of the rewards to the stakers and some rewards, as we do now, like 30% to the automated market maker or like liquidity. And then for the holders, there is like various types. Like we currently just distribute rewards pro rata on their inventory of Regen tokens. But it might be different. It might be like equal or whatever. And then some of these minted tokens should go in the automated market maker. So far, again, it was when the tokens were going here, it created a lot of sell pressure, because you add, like it should maintain the ratio, you add Regen token, the price drops. So far I stated that kinda this amount of tokens, half of the tokens come in the region, half of the tokens come in the stables, to not disturb the price from this minting. But it should increase the depth of liquidity, more liquidity, more stability. Then there is something called like market setup. So holders can, trade with the fund, and some rewards commissions to the like LPs goes here, but there is something I call like, as our system is like inflationary, is like we mint all these tokens. One of the key ideas was that we need to balance that with something called like external demand. So like I imagine that every tick, every month, so for like every step is 1 month in the system. Every month there is some inbuilt um, demand where like some amount of Regen tokens are being bought and burned. We can play with this number, and it's not like it's doing right now, but it's for modeling how burning can balance out the minting. And yeah, like other external LPs can participate and add to the market maker, but it's proved to be not changing much in the price of the token or some other mechanics. Like we can play with it. So this is pretty simplistic schema, so like it was modeled, this was schema for the grassroots economics made by Block Science, and they also had like Red Cross giving money every cycle or something, and then it's distributed. So it's a bit simpler, but you could, like in nature, it's what I modeled so far. And I also modeled mostly like the model itself comes from the tool called NetLogo, which is like a scientific open source tool for modeling. So you kind of implement all the parameters of your system of like what actors may do, how they play with together, and so on. So it's written in the code with the help of AI, and then in interface you can just set up some, sliders or graphics. So it was good for testing the model and understanding, how it works, how different parameter influence. But further on, I put it into the like with Replit, like AI tool. Like I built like a small application which allows not only running a simulation, which I'll show you now, it will also allow running a bunch of simulations with different parameters to see the influence of each parameter. So I'll show it later, but so far, like let's go through quickly the presets. So as I mentioned, 22,000, like 227 wallets represent 22,000 wallets. So it's just like simplification, but on the amount of tokens is the same, it's like that's their mean holdings. Then the fund that means, doesn't save any tokens for itself. And here is like one of the most important parts of the model. So here, the issuance rate, it's like basically our staking ratio, right? It's 16% right now, but as our tick is 1 month, like zero, like 1% every month for 12 months would be almost equal 16%. It would be like around this number. So, but this is like one of the most important parameters in this model. Then there are like various politics for the fund, but again, we don't hold, we distribute this everything, but we can play with different other things. Extra setup I made, but so far let's just play with like just distributing all the rewards for everybody. Then another two most important parameters in the system is the starting demand. So how much Regen is burned in dollar value every month. And what I understood is like you can set up really big number here, but through the longer time goes, the inflation is getting much higher than the monthly demand. So you need to also grow the demand so it will match the burn, like the minting. So again,
On these
yeah.
on these percentages here, when it says demand growth rate percentage and it says 0.030, is that 3% or is that 0.03%?
No, it's 3%. So it's
Okay. So maybe you shouldn't actually say percent there
yeah,
because
I'll improve the like You see, like it's written here like 3%, but
Okay.
I used the
Okay.
wrong. Yeah, it's basic points BPS, I guess, better. Then the initial price around 1 cent. Then demand elasticity is how quick the price, the demand updates to the price. The higher the price, the lower the demand. So whatever is below 1, it means like demand declines, but a bit slower. You can have it like up to 5, so 1% change in price would decrease the demand like 5 times or something, or like 5%. But I said it like at this number, it's not ideal. It's around, estimated. And also another thing that showed later in the model is like how, like to avoid spikes, I said that like our pool can only send up to 15% of its inventory per cycle. So it can't sell all the tokens in one cycle. Then there is this like automated market maker. I said like because it's one region is 1 cent. It has like $50,000 in region and 50,000 in dollars. So again, we can play. Tell me whatever you like to put here, but so far this like automated market maker operated with these numbers. And you also have like one thing with modeling is like you don't want to model every tiny detail, so we have like 6 chains, delays between chains and everything. So it depends on what we want to model, but we need to define what's critical and what is like additional. So so far it's simplified as we have only one market maker, which allows like whatever amount, like how much LPs add to it, like every cycle they can add like 10% to the fund. The commission is 1%. Again, we can set 0.5% or whatever. And finally, we came to the end parameters. So we need to set how many time steps or months we want to model. I said 60, it's 5 years, right? So we can further think about maybe adapting to days or something else. But for now, it was like a selected length. And let's see, with these parameters, how our price changes. So like in 5 years with these parameters, the price would, be this, like almost twice lower. There would this be like the demand, the automated market maker fund, pool TVL, like how much staked in the pool, how would change the distribution of tokens, how many tokens would be in holdings, how would be. So you could see like all these different details. I didn't intend to put the price as the main optimization criteria for the model, but I imagine that if we model a situation where the price would like slowly grow, that would be like a positive, and it doesn't mean that if the price would fall, it's like obviously a bad result, like the traders in the pool of TV, they can earn a lot of money, or we may sell a lot of eco credits. It's not the only criteria, but as we can see further, there is this what happens, due to a lot of minting, the price drops, and then it stabilizes at the levels where demand grows and minting kind of stabilize after like almost a year or so. And then there is, you could see because of huge trade at the beginning, the slippage goes like that, but then it stabilizes around 0. The volumes of trade grow. This is the how holdings change, so the inventory grows, but slightly. So Gini coefficient is used for inequality. Inequality is slightly higher, but not critically. In some scenarios, we went from almost like good distribution to 99% of tokens being like in hands of few in some cases. This is like the supply of the tokens and the total value locked. And yeah, this is the automated market maker. This is the minter. This is how demand grow, and this is how minting and burning, work together. So I have another thing to show you here in the parameter sweep where we can look into how different parameters affect the price or whatever, but I'll stop here just to check your reflection questions or anything else.
One thing I'm wondering is, has anybody had a chance to play with this at all? Mark or Brandon or Christian, have you um, done any fiddling with it?
Yeah, I tinkered with it a little bit, but nothing nothing I could get from it. But one comment that stuck out to me is I think whatever this is able to do, it probably has to account for the chains and the LPs. It's like the economic backbone for like speculation and governance and like getting things over the line. I mean, if someone has a lot of Regen, they can say what's what on the chain more or less with community consent and consensus. So I think that that's like a important part to model is the chains and the liquidity and then the ledger itself and what it's supposed to do. But I don't really fully understand it. I haven't given it like a real session yet, but I've been looking at it. I haven't ran any simulations, so I'm glad Max is doing this today, and it's informative.
Yeah, I was looking at the parameters of governance, for example, is one of the other things we want to model further. So I guess we might have more than one model, dependent on what we want to model. Yeah, because I said like sometimes, what I observed around current mechanics, I'll show you, but it's mostly about the external demand and minting, so being two most like powers in the current model. But we might go in deeper into like modeling of settlements, modeling of governance, modeling of many other things. It was just this first setup. Mm. Any other feedback or question?
Well, it's definitely really exciting that we have this, and I think the next thing is just sort of playing around with it and see what we can make of it. Has I guess oh I see there's also a hand raised, but I guess just quickly to ask, is there anything you've noticed so far as, I mean, you had said, for example, the inflation rate's really important. Are there any other things that are sort of takeaways of like sweet spots or places we should be focusing or that kind of thing?
Yeah, sure. I come to Kawaii in a minute, but just to show you what, like I've been, of course, playing it with different setups, but here's another functionality. It's called parameter sweep. So it allows to run the model, for example, analyze the impact on the price, and we can do LTV or volume or whatever. But let's imagine the minting rate might be between 0 and 5% per month. So 5% per month is like, I don't know, like a huge number per year, right? And 0 would be like minting no. And another parameter, it's not even demand size, but demand growth, because over time, every tick, if it grows, it's like it can grow 0% or 10%. Again, that would be a huge difference. And we will try to make like 5 steps between 0 and 10. And we can do like some runs because there is some probability with working on of agents, but I found no huge correlation like so far with the number of runs I do. It will just take the median, but then it would need to make like 3 times like 75 simulations instead of 25. So that's one of the ideas. And then you run this model a bit more. They're almost done. So yeah, it shows like this is like just a table. So it just shows like the higher issuance rate, the lower the token price, the higher the demand growth rate, the higher the price. And if you look, there is this heat map. So zero issuance rate and 10% growth rate will produce the best result. But in our case, still like maybe a price of 3 cents. So we start with 1 cent. In 5 years, it might be 3 cents if we use this. But if we will use 5% issuance rate and no demand growth, it will stabilize as well, but more on the level of like half a cent. So we can play like there are a lot of parameters we can try together with you or you alone, but this was main learning from the current model, which is pretty simple as well.
I guess one quick takeaway there is just that generally speaking, there's much greater extremes in crypto. So I wonder if we need to expand the parameters, for example, for demand growth and other things like that, by a margin of, 10 times or who knows.
Yeah, yeah, we can try different things here. I also see that modeling demand growth or like demand overall might be also interesting. Like how can we, like which activities can produce this demand? But Kawe has a hand, so please go ahead.
Yeah, just want to thank you for sharing. I think I'm learning a lot just for seeing the dashboard and how you approach it, like how to build on the Replit and how the in the dashboard. I think something that stays for me is the what you said that is critical. That maybe instead of critical, we could say what is the what is common between the simulations and what is like the variables we want to change. And then being able to create like a comparison, like of a base one, like a common one, what is happening and what is the change we want to do to compare these results. I think this could be uh, yeah, this is what came to me basically.
Mm-hmm. Nice.
Do you think this makes sense?
Yeah, sure. For as I mentioned, like it's my feelings, on the one hand, even before we did the modeling, it wasn't a surprise that demand on the Regen token would, be the main factor of people earning here, or growing their region or whatever. But I think with lots of complexities, with automated market maker, with flows and everything, I felt that many parameters or like demand elasticity, they can only slightly improve, but or slightly like like decrease the results. But the main dynamic is that there is a balance between burning and minted tokens. I guess this is the key question. It's like there is current stable situation, but we mint a lot of tokens, and if we, for example, set not 60 steps, but like imagine 600 steps, for example, so this is already 50 years, right? Where we can operate, I guess, with really lengthy times. But you see that due to the number of like many months and increase in percentages, it just becomes like uh, traded volume 7,000 billion region or something because of the inflation, being like
Mhm.
crazy because of the constant minting. So we either you see like we can either where is it? Yeah, the burning starts after like some years, so they go almost hand in hand, but at some point, like this balance of minting and burning creates crazy results.
Yeah, it seems like maybe one next step is just how do we kind of test the parameter ranges and what kind of comps can we look at that just help us hone in on okay, maybe there's this entire range that we have right now for whatever the variable is, but what's the sort of part of the range that's most useful for what we need to model? Um, I guess that's the kind of the biggest question of how do we choose parameters that actually mimic the situation we're in right now.
Let's do one together. Like you can of course do it on yourself, but let's try any hypothesis like just now, and we will try to like also play with the um, analysis of sensitivity of different metrics. So from the metrics you see right now, is there like some experiment or like imaginary change you would like to try out? Like change of issuance rate, for example, or the something about the demand growth, like or something about the um, what else? Yeah, the timing. Any of that? Would you feel like you would like to suggest an experiment?
I guess maybe the demand is the most important thing to look at right now.
Yeah. In this model, I set like 10,000 and 3% growth, which is like, I guess it's if we achieve that, it would be considered like great at this point of time. Because on my evaluations, well, no region is burnt right now, but even some region is purchased or whatever, it's like less than 10,000 constantly months over months with growth. So we can try, set up $1 million here or, get some other percentage. What would you like? Or like $0 or $100? What would you like to try out here?
$1,000. I mean, from my experiments, we're not seeing $1,000 by volume. It's
Yeah.
mainly just writing volatility from paired assets.
And what about the monthly growth of this demand?
I guess 3% is fine because, or what do you mean demand? What is that demand growth vector? Is that buyers or what? Like explain.
It means like this month it's 1,000. So next month it's 1,030. And then
Ah,
it's
that works.
1,060 something, So it's
That works.
how it catches up. Because if it don't catch up, it's like the whole system goes down because minting is permanent. So yeah, like I tried with $1,000, also quite realistic at this point. So if we run that, what we'll see. So the price drops slightly, so from 1 cent to 0.8 cents.
Hmm.
It's like in 5 years. And yeah, it's you see the
Why is the
dynamics.
TVL? Why
Hmm?
does the TVL say 26 million?
So it's as we mint some of the part of the minting goes to the market maker, and we also allow external LPs to participate and give 10% of the pool every tick. We can change that.
Mhm.
So it grows over time, and in 5 years, it starts with like $100,000, but it grows into 26 millions.
Oh my. I don't know. That doesn't seem right. But because right now we got about 160,000 in total liquidity at the moment.
Is it 50/50 region dollars?
Yeah, yeah. Because I did the buy side calculation just recently. It's like 81,000.
Yeah. And uh, yeah, currently it says like everything is sent to the to the rewards, but let's say that 30% would go to the it's burning. No, which one is this? Yeah, 30% will go to the market maker and 70% to the holders. But again, I mentioned the caveat here is that if we just send Regen to the market maker, the price would, go down really quick. So I imagine we, send this value, but it attracts dollar value. There is something happens, and half of that comes in Regen, half of that comes in dollars without the change of price.
Yeah.
So first of all, we can run this simulation to see how it goes. Yeah, you see, like, because more from the minting goes to the pool, it increased. And then we can try this sensitivity tracking. So what would you like to track? Like token price, supply, or something else? What is of interest to you?
I'm just trying to understand what we're looking at right now. I see pool TVL, I see AMM base reserve, and the numbers just don't really click for me at all.
Yeah.
The 58.9 million and 3.5 billion is like yeah, because I think we're onto something here with like just being able to model based on what we have and all that. But these things are like throwing me off. Otherwise, everything is kind of in scope to track. This doesn't account for like eco credit mints or anything. This is like solely around the regen token, right?
Yeah, because like with eco credits, I imagine, we can have different system, and that's why we can model the demand. But
Hmm.
whatever happens with eco credits, we intend that some region would be burned because of that transaction, right? So
Yeah.
you retire the eco credit and $2 or something with regen. So I just
Hmm.
accumulated that with this demand, so there is like some
Hmm.
external demand, and to not make it complex, I just have like how much is burned every month. And regarding your question, like, I guess we with time, more liquidity comes to the market maker, and 3.5 billion regen at that time would be just like 35 million. So out of this amount of so pool TVL will have 3.5 billion regen and around $35 million.
Fascinating. I don't, but the total supply though.
The total supply is why it's so strange. Yeah, I know, because there was some I still was figuring it out with how to measure supply. So I think it's not total supply, it's like circulating supply,
Uh-huh.
because you need to count which different.
Yeah, but we won't have 3.5 billion regen though.
Um, I think it goes with the issuance rate, even like with
Mhm.
it's like 5 years or what? It's 5 years, 5 years, 1%. Yeah, we could see that, I think, here in the total supply. So we start with like 160 million in
Mhm.
circulation and end up with 200 in circulation. I think there's just like something happens with how to evaluate the market maker, because like it's not in circulation, it seems.
Got it.
And we
Yeah,
can
I mean,
try. Yeah, go ahead.
we can keep feeding into this. I think this is like a cool thing to check in with every call because we can look at we can look at the data and we can all like point to certain parts of this uh, modeling tool. Um, yeah.
Yeah, as I saw like previously, for example, when Block Science was doing something like that for Token Engineering Commons, they also opened up like a dashboard for everybody to play. They had some calls to explain people and discuss the findings and so on. So I guess there is like a long road ahead. We plan to, till the end of the quarter, we will improve the model,
Mm.
like look into some maybe like improvements or whatever. Um, but this was like the first version, which was, I was really inspired to how it comes together.
Yeah, very cool. That's awesome.
So maybe like I invite you to try it out, and if you would not have some functionality or have some questions, feel free to reach out to me. We can, uh, find the way to apply it. Yeah, maybe we can move to other questions if you like.
Yeah, if that's cool, I made a comment in the tokenomics group. I wanted to, oh, regarding the stake, but I'll wait to see if anyone else wants to add anything. All right,
Yeah, it seems like go ahead, Brandon.
cool. So I was getting some data from Mark, and and we only have like 51% bonded, and so we don't really have like a 93% stake the way that it's been framed for a while. Maybe someone can correct me on the nuance of that, but I was looking at how many people
Yeah,
are
I've been
jailed.
mentioning that for like a year now. It
Yeah, that's
sounds like for some reason, uh, some people had been arguing that foundation tokens and community staking DAO tokens shouldn't be counted in the total supply because they are permanently locked and not going to be sold. But then it just, ruins the stake percentage calculations if you make that assumption. So I think it was like sort of taking one assumption and putting it into another context in which it doesn't really make any sense. So yeah, I've
So if
mentioned that
we're
a bunch of times over the years. I'm
on
not really
Mintscan,
sure why it's still persisting.
if we're on Mintscan, well, it's related to the topic to the LST. It's supposed to be something that's attractive for the LST, but the LST only makes sense if someone's actually going to do it with size and in line with the catalyst of regenerative.fi launching, or just getting things more busy on Osmo. I mean, it just depends on what a region whale wants to do. But uh, I don't even know how to see, like, so if I go to Mintscan, like, how am I going to see these wallets you're talking about staking? Because
MintScan does have a percent staked ratio. Let me pull up MintScan, or if somebody wants to pull it up and share their screen.
yeah, I can't share the screen, unfortunately, but I pulled it up and I'm able to look at, you know, block or validators, and the ones that are like bonded, it's a 51% bond, and that's the ones that are actively staking. And then when I look at the jailed, the only ones that are approachable are LOA Labs, which is a familiar entity to me um, throughout the years, and then so is Informal Systems, which I believe somebody's modding in conjunction with that. So I'm just curious,
Are
like,
you saying why is the bonded ratio so low? And how do you make sense of that within the validator list?
Yeah, well, it's kind of, yeah, a little bit of that, a little bit
Max,
of
could you switch over to validators?
so those are the bonded ones, and so it says 51%, so it's a 51% stake where actual security is being contributed.
Yep.
And
Yeah,
but
so
it's
the other 49% are unstaked. They're, just sitting in people's wallets or, on exchanges or wherever.
mhm. And we've discussed uh, how to approach if you click jailed on bonded, Max,
Hmm.
where
Yeah,
it
if you
says
go to it
bonded
has that bonded drop down next to search.
Um,
to the right.
Yeah,
There you go.
right there.
Oh, nice
So,
tool there. That was clever.
yeah, so jailed, yeah,
So
Loa
LOA
Labs.
Labs, we know them. We've heard of them. I've seen them. I've seen you guys like I've seen regenerative like refi groups discuss stuff with them. So that's like 3.68%, like just sitting there.
Yeah, so
Uh,
essentially there need to be some redelegations. So people are delegated right now. I can check. I had gone through and checked foundation delegations like
uh-huh.
I don't know, month or two ago. So it's probably time that I go back through and recheck the foundation delegations and make some redelegations, but I'm sure there's other folks delegated too.
So that's their delegated holdings. That doesn't say that they're holding. I see, because they got 361 delegators.
Yep. Yep.
I see.
You if Max, can you scroll to the right there? Is there more in that table? Okay, that's as far as it goes. If you click on an individual jailed validator, we should be able to see their self stake versus their delegations. So let's see. Self bonded one. So
Oh, sh
essentially that 4 million regen, that's all other people.
Ah, my goodness. Okay, I
Yeah.
was just trying to figure out a way to activate the jailed ones and try to like.
Well, so essentially this is regen token holders who haven't checked the validator list recently. Somebody's shut down and no one has redelegated. I'm not no
eh,
one, but these are we're seeing the people who have not redelegated
Right,
when a validator has shut down. Were
got
you
it.
going to say something there, Mark?
Yeah,
Oh.
and then informal systems has zero bonded, but they're delegated to as well. So it's a delegation issue more than a.
Yeah, and that's why that 50 that's definitely a contributor to that 51% is essentially anyone who's delegated, if you're staked to a jailed validator, that stake doesn't count because they're not an
Yep.
active validator. So yeah, I mean, one way we could boost our stakes ratio is people simply redelegating from the jailed validators.
All right. Well, I wanted to signal that. So thanks for letting me thanks for walking me through that.
Yeah, thanks for flagging that. And it is an interesting question about, a lot of Cosmos chains are sort of in this position of having a very small market cap now. I wonder if there's any kind of like campaigns that communities have run to get people to redelegate, or
Right.
to do something, because
Well,
being delegated to, I mean, I guess the one piece of good news is
hmm,
if it's delegated to a jailed validator, that is not stake that's then going to be bought up and sold or
mhm,
all these other things. In a way, it sort of is contributing to network security because it's
mm,
like tied up until somebody does something with
sure.
it. But obviously, it's better to be staked to an active. validator than an inactive one.
Mm,
Yeah, that's what I was gonna say as you were talking. You know, it's a nice deed for us to tell those folks because we want them to be earning their income. You know, if they're
they're
staked to
staked,
jail
right?
validator, they're not getting any return on that. And these are
Yep.
people in our community, so we should care about them and want them. But if we have a limited amount of bandwidth to be doing communications and outreach and all that, I'd say it should be focused on getting new people
Hmm.
interested in Regen Network, and those people who are already bought into Regen and just haven't redelegated. You know, like I said, if we have a limited amount of comms uh, focus, I don't think we should put our focus there. I think we should put our focus on getting people excited about the coin, buying it up, staking it, participating in governance, all that.
Yeah,
Yeah.
and also as you're saying, Christian, I mean the best way to get existing holders back involved is if activity shoots way up, token price is at $1 or whatever, then those people are going to be, that someone's going to call them up and be like, "Hey, didn't you tell me you had regen like years ago or something? You do it? You paying attention to that?"
Yeah, but the
Right,
problem with
right.
that, guys, the problem with that is we have to spend so much. We tried to get engagement with AI bots and things like that on Twitter, and our followers went up 300, right? So there has to be a more of a systematic plan that's including market makers, influencers, liquidity, right? That is,
Yeah, no, Christian's not arguing against that. Christian's just saying that if we're figuring out where do we spend our limited comms efforts, telling existing token holders to redelegate is kind of low priority.
Exactly.
And I can
Anyway,
speak
yeah,
to the,
nobody's arguing against what you're
yeah,
saying.
no, yeah, because I agree because I didn't catch everything, by the way, but the whole thing is that they probably forgot that they have region staked, or they're not focused on or care or even know that their validator is jail. So I think we discussed that, right, Christian? Like, I don't think there's such risk of delegators to jailed validators are going to all of a sudden become unstaked and sell. Is that a fair statement? What we all talked about?
Right. Right. It seems like they are disengaged completely at this
Mhm.
point,
Yeah, and I'll speak.
which is fine. That's not a group that we're particularly worried about, like all of a sudden unstaking and selling.
Yeah, yeah. Sorry for bringing that up too earlier, but the one thing I'll speak to the influencer part is I participated in uh the Tregen spaces. The Jimmy Cohen guy, he's something else, man. I went to the X spaces, and there's a lot of energy and a lot of people showed up, and he's like able to tell everyone what to do in such a like kind and like funny way. It was a really cool experience. I got to jump in at like 2 hours ago. It's something to lean into if we can once in a while. There's and apparently there's like he's gonna pair our TGN with Regen as well. He publicly announced that uh to the whole meeting or the whole group. It was like 40 people in there, and like 70 people tried to go, but X Spaces like crash often. So pretty excited. And then like TMO, I don't know if anyone else is familiar with him, but he's contributing with Jimmy creating this
Oh, cool. Yeah, we
NFT.
are familiar with him. Yeah.
Yeah, and he created some insurance mechanism where it's an ENS type name .tgn, and it has like this agentic capability for making swaps like as you write it out in like sentence format. It's not there yet, but all this is kind of rolling out, and it's in line with a big liquidity pairing. He said something like 10K match of some sort. I don't know how true that is, but the sound of it is, that's going to be huge because my main thing is like I need to the like, I need to trade Regen more, not to like show that it's alive, like it's not a tradable asset right now. It's more of an investable asset, but it needs to be both. And unless we get a big kahuna to DCA in relatively with a full conviction, there needs to be somebody taking a buy and a sell to make a market, to help assist in market making. That's in anticipation if there's no catalysts. Like we need to all have our own little agent that's constantly swapping Regen against other assets with some baked in logic over a very long time frame, and that contributes to the tradability of the asset. So that's why I'm curious about the CAD being modeled based on like actual TVL uh, and like actual economic mechanisms that are in play today, not tomorrow. And then when they're in play today, we just add them to that CAD. So that's really exciting. So I know we're like at the end of the hour, so thanks for letting me ramble for a bit. But it was a really cool meeting. I hope other people from this call can join and just kind of get a vibe for it, and then talk about Regen or get involved in the thing, and it just kind of like gets the movement to like bond a little better, a little bit more.
Yeah, thanks, Brendan.
Anything else before we close?
Yeah, I want to just add that I know Jimmy too. He's a great guy, great energy on the spaces, and yeah, TMO. I was like learning with him like how his framework works, what he uses on the back end, and it's pretty cool. I think like the name services will help a lot if we can yeah synergize with them. And I think they have their own explorations on agents too for other orgs. So yeah, definitely something to plug in. And the work I think TMO does too, with land, nature, financial. Yeah, it's he has a platform in nature finance, and he has some models too. I think this could be also a synergy to explore. And I'm always about myself. I'm always talking about Regen on the spaces, on the dev build, and Green Network. Uh, we think green goods could be something where we really want to explore how to bring the registry and maybe yeah uh, the how to include the region token there too. And on Green to Brazil side, I still want to explore how we can use Excel region on Celo blockchain to iterate. We are still in prototyping phase. I would say because there is a lot of things that needs to happen in parallel, like the governance of the because it is a local node. It's not like Green to Brazil. It is like a local node that has a pool, and there is 21 projects there that has credit. So we want to implement some experiments to see how this works. So this is something I hope to explore, and I think the simulations will help a lot. Um, I would yeah, just bring again the idea of being able to like go in the same direction that Brandon was saying, like how to look to the present, like what we have now, and compare like a small time frame of change. Maybe this could be just an additional. I don't know how it works to do this kind of addition, this change on the platform. But yeah, I would say maybe to explore something like that, and use like in this phase, I think estimations. Like let's instead of like trying to customize for every chain, let's simplify and get the values we need for now and change manually some stuff. This is I don't know what came to me on that. Yeah. Thanks everyone. Glad to be here.
Yeah, thanks, team. Then have a productive week and speak to you soon. Ciao,
Cheers,
ciao.
everyone.